Anish from BlackBull Markets. Behind me the chart of gold, and following the FOMC activity we've seen over the last 12 hours or so, we saw a lot of volatility represent in the chart, almost a $30 range from just before the announcement to after the announcement, and now since the US markets have cooled off, we've seen pretty much returning back to that initial consolidation area that we've seen over the last 24 to 48 hours around the 1868 mark, which on the higher time frames, which we'll see shortly, is at a key Fibonacci retracement and resistance area. Now, that break of 1875 was key earlier on for traders because it did indicate more bullish momentum and appetite to take it higher. However, we did reject that $1890 mark earlier on today, and bulls failed to take it above that key $1900 mark, seeking legs for even higher grounds on gold, which does overall for me show a lot of appetite for this metal to head higher, as of course we have that Canada inflation print above 3%, as well as CPI from the US at 4.2%. These are all decade-long highs, not seen this high inflation since 2008, where previously we saw all-time highs in gold, and now markets are continually looking to take gold higher. If we look on the daily time frame, we've analyzed this chart a lot, and that break in recent weeks above 1829 was a key signal for bulls to enter that trade, taking out our next take profit at the 50% mean reversion at 1876. Beautiful trade if you were on that train to the upside from 1829 to 1876. Now we're looking at a possible retest of this support around 1860, 1850, before we do get another cycle of bulls looking to enter the market again, taking out that previous wick of today at 1895, and then moving towards 1923, which is your next target for bulls at the 61.8 retracement. Again, another key resistance area going back all the way to August 2020. An entrance above 1923 does put in a new trading range all the way up to 1955, but what we could expect somewhat is a continuation of this consolidation area between 1876 and 1829 to continue until we get further direction from the market or central banks to take this metal either higher or lower, where the general consensus is for it to head higher. Of course, we have this, just summarizing previous analysis, beautiful double support here at 1676, really firming that move to the upside, break of this trend, of course, that we had ever since the start of the year. Now markets forming a new trend to the upside, which is accelerated pretty heavily now, as well as especially given the fundamental environment of the markets, with interest rates still at rock bottom low, liquidity still hitting into the markets, and also with the dollar rallying, or even set to rally. That dollar-gold correlation is somewhat dropping, so investors really turning their attention more to gold as a non-interest-bearing asset, which of course considered a safe haven, especially with all the geopolitical concerns going on in Israel or Palestine. We could see more investors hit up gold and look at 1923 as the next target should we get a firm close above 1876. Of course, it didn't happen today, but it could well happen the end of this week or by next week, and if that does happen, 1923 is your target. Well, all the best, trade safe.